Hey everybody, good morning. Welcome to an episode of Stocks for Breakfast. My name is Pete Renzulli. Thanks so much for joining me today. Today we got a bunch of stocks we're going to be taking over to see which ones we're going to buy, which ones we're going to not get involved with. But we're going to first start out with something that happened yesterday afternoon. I want to take you behind the scenes. Everybody here knows, if you've been here for a while, you know that we have a 30-day boot camp, and the boot camp actually works in three different ways. First, there's review the strategy, then trade, then coaching. Review the strategy, trade, then coaching. We try and do that circle so that every time your experience keeps going up and up and up. And what we talk about for stock trading specifically is the more distinctions that you can make, the better decisions that you're going to make. So obviously, every time we do these videos, we discuss everything here is for educational purposes and that it's up to you to make the final decision. But my mantra, my mission is to help you make better decisions. So I want to take you behind the scenes today into something that happened yesterday afternoon. It's something that I had typed into the community as an observation into the way that the market was unfolding yesterday. And I'm going to say something really strong here right now, which is how I predicted today's market open. As of right now, the S&P futures are up 44.5 points. So we're going to get into that, and then we're going to get into a bunch of stock picks. We're also going to review yesterday's momentum ideas that we discussed, how we said we were going to play those stocks, if we were going to buy those stocks, and what actually ended up happening. So we have a lot to cover on today's video. So stick around. I'll be back in just 1 second. Okay, so obviously, thank you so much for joining me today. So we're gonna give a little bit of context on what's going on right now. And first, I want to work our way over to here. And really the biggest thing I want to talk about is what's going on in the bottom corner over here. So hopefully you can see that over here. We're up 44 points. Let's just say 44 points in the SPY. So obviously on the 5-minute chart, that means that we're having a pretty darn good day relative to where we were yesterday at this point. We're going up, right? All of that is amazing, right? After the fact, you're talking about it after the fact. No. And I want to walk you through something that we had yesterday. And this is a really important lesson. This is a lesson you want to write down, watch more than once, and put this into your trading mental bank account, because this is going to make these kind of distinctions are what will ultimately give you that absolute conviction that when you buy a stock, you put all the pieces together and you have every reason in the world to accept risk because you think there's a good chance of making money on that. We're going to talk about that in a little bit more detail as well. So I want to show you the conversation. Then we're going to give you a explanation of that conversation. Then we're going to make our way straight over into Bitcoin, which is actually showing some signs of life, and which Bitcoin stocks I'm planning to buy. So we're going to start here. I'm going to take you into the conversation, which is, this is a conversation that we had yesterday. And you can see that it was 3:41 in the afternoon. Okay. And here's what I basically said. The VIX, which is the volatility index, is pushing down all day. And it's interesting, right? I want to be clear on that. This is what separates traders from those who are frustrated. I said it was interesting. It was an observation. And then that observation became a conversation. So if you can remember that flywheel that I just talked about, review the strategy, trade, and coaching. Review the strategy, trade, coaching. And the next time you review the strategy, you learn a little more, you trade a little better, you go back to coaching, and that cycle just keeps raising the bar on what's possible, right? So we take the conversation a little bit further. The VIX, the volatility index, trading down with a large bearish gap. So equals not pricing in a lower move. So as the VIX is trending down, that should mean prices are going up. As the VIX is trending up, that should mean they're forecasting. Pricing in is the word that we use. We purposely use pricing in, not forecasting. So when one type of trend unfolds in the VIX, more often than not, the market does the opposite. So if the VIX is trending up, the market goes down. If the VIX is trending down, the market typically goes up. And the reason for that, I'm going to show you that right now, but let's finish the conversation, okay? All right, so here's what we ended up happening. I was asked, meaning you don't think it will follow through. So we're talking about moving lower, not pricing in a move lower, meaning you don't think it will follow through. And my answer to that was correct. So now I want to give you a little bit more context, and I want you to print this. I want you to screenshot this and print it out. If you're on our email list, if you happen to get my daily e-letter that goes out every day, you've got this in today's email, but I want to give it to you anyway so that you can copy it. If you don't want to screenshot it, you can click over on the community tab, and I actually posted it over there as well. So how I predicted today's market open. All right, so we're going to zoom this out a little bit. And I think this is one of the most important parts of trading that a lot of people just really need to learn. Some parts of trading are formulaic, some are habit, and some come from experience. So I want to break that down a little bit because it's critically important. It's one thing for me to give you this type of information. It's another thing for you to actually use it. And the journey that we all go on as traders, formulaic part means that you have to develop a strategy. You have to put together the pieces that if this happens, then I plan to do this. If this happens, there's a high probability. That's the formulaic part. The second part, which is habit, is we talk about you have strategy. Now the habit part is, can you actually follow the strategy? That's where the habit comes in. You develop the habits of, if this happens, then I take this action. If this happens, then I take this action. So if this, then I take action. And then the last part is the experience part. So you have strategy, habit, following the plan, and then the experience part, which is you notice and you make these kind of observations, which just consistently elevates your thinking as a trader. And now you're separating yourself from the pack, because what we call, and you're going to see in a second, we call this building an argument. And this is really what separates somebody. If you think everything in the market's overwhelming, if you just haven't been able to get to the other side of being profitable, there's a gap. And you have to ask yourself tougher questions. Which part of, if this happens, then I plan to do this, which part of that are you not getting? If you're watching this right now, and gosh, I really am so grateful that you're here with me early, 7:30 in the morning, that doesn't tell me anything. That tells you how badly you want it. So hopefully that these pieces start to add up. So you're gaining experience. You're learning to make more distinctions. Now let's walk through how that led to what we predicted for today's market open. Obviously predicted is being a little bit joking, because I don't like to say that at all. It's we put the pieces together anticipating the most likely outcome for this morning. And isn't that really what trading at the highest levels are? Building the argument, making distinctions, having that strategy, and putting a trade on because you have a pretty good idea based on the distinctions, based on your strategy, what's going to happen next. And if you're a trader who gets pissed off every time you have a losing trade, you need to kind of dial that back and say trading's about the edge over time. So let's work on the rest of this. And I promise we're going to go right into Bitcoin right after this. Okay. So moving along, below is an observation I made, and that's actually what this was. So if you want to actually have that, you can actually take that so you can see it in a little bit more detail. Okay, posted that in the chat, in the link there. So these are the kind of distinctions that you make as you gain more screen time. This is actually a big part of trading as well. When I owned my prop trading firm, when I owned my firm in New York City, one of the top questions that we would get is, can I have more buying power? Can you allocate more shares to me? Right now, I'm only trading 125,000 or $500,000. And the question I would always give back to that person is, do you have enough screen time? Are you managing the downside? Prove to me that you could manage risk so that I can give you more. If I go to lunch, you're not going to blow up your account. So screen time, how many hours are you actually trading? You need to learn to trade, and then you make more of these distinctions. Just watching trading and just reading books, that's not trading. You have to actually place trades, all right? So yesterday, the VIX, the volatility index, rises as expected increases in volatility and lower prices unfold. That's what normally happens, okay? So we've kind of made a distinction based on what normally happens and what was unfolding yesterday. Yesterday, the market in many stocks gapped and traded lower, and the VIX should have rallied. So remember, the biggest distinction that we're making here is, if this happens, then this. If this happens, then this. But what we're pointing out here is what should have happened did not happen. That was a big distinction yesterday. Okay. And again, this is where you start to learn to think differently. This is where you learn to think, act, and trade, not think, act, and chart read. There's a big difference. We're going to cover that in just a second. All right. So yesterday it should have rallied, or at the very least trended higher during the day. It didn't. It trended lower. So we're saying what should have happened did not happen. This meant, at least in the short term, that options market makers were not expecting a move lower, which is actually what we said here in this conversation. So based on what we predicted, and obviously predicted is a little bit facetious there, we predicted the market would open higher today. And as of right now, the S&P 500 futures are trading 44 points higher. Now, Is this magic? Do I have some skill that you can't learn? Of course it's not magic, and of course you could learn this, but you need screen time. Now, how you get that screen time, it could be by yourself, it could be with a mentor like myself, it could be like a community we have ourselves. But here's the biggest thing. The single biggest mistake that I made the first 2 years I was trading is I had 1 month, 2 months, 3 months, 6 months, 12 months worth of experience, but I wasn't making these kind of observations. I was too hyper-focused on, was I making money? That didn't work, go to a different strategy. Was I making money? That didn't work, go to a different strategy. So I had 12 different 1 month experiences instead of 12 months worth of experience. I didn't learn from everything that happened. I didn't learn from every observation. In today's day and age, you have notebooks, you have Google Docs, all that kind. You don't even have to type anymore. You can just talk it into your phone using notes on whatever phone app you have. It's critical that you jot down what happens and what happened after so that you can make a big list of what works and eliminate what doesn't. These kind of observations are what make you a special kind of trader, because most traders don't do this. Most traders just from day to day say, I didn't make money, I did make money, I didn't make money, I did, and don't even know why. And then you don't put yourself in a position where that happened, now I'm going to learn for the next time. So remember the flywheel that I just talked about. Review the strategy, trade, get more coaching. Review the strategy, trade, get more coaching. As you go through that cycle, you start to expand all the distinctions that you make, and that's where trading becomes fun. That's where trading becomes something that you can't wait for the market to open, because you know exactly what you're going to do, and you have a pretty damn good idea what's going to happen next. Now, what's interesting is I'm going to take that conversation right after we talk about Bitcoin and mining stocks into the momentum trades that we talked about yesterday, that we said, if this happens, then we plan to trade it this way. What happened is not what we needed to see happen, so we just left it alone, and then we found ideas somewhere else. That second part is where most traders mess up trading. You go into the day saying, I'm going to buy this stock. I can't wait to buy this stock. As soon as the market opens, I'm going to buy that stock. Stock opens higher and starts trading lower immediately. Does not do what you thought it would do, and you're buying it anyway. That's bad trading. So you got to make those distinctions. If this happens, then I plan to do this, and then I plan to take this action. If you continue to take the wrong action, if you continue to blow your stop loss, you're still hoping. Stop hoping and take control of the outcome. All right. So let's finish this up, and then we're going to go right into the Bitcoin stuff. All right. This is what we call building an argument. And this is what makes us different. Okay. We're not just talking about price action. We're putting the pieces together in price action. You're on a path. When you're doing all this, you're on a path to becoming the best trader that you can be, not the best chart reader. So I can't stress this enough. And I talk about this all the time. You did not open a trading account to be the best chart reader in the planet. You did not become somebody who put their money into an account, worked hard, put that money into an account to be the best moving average crossover reader in the planet. Sure, that stuff helps, but you opened an account to see it grow. You opened an account to make money, which is meaning that you opened the account because you believe you have what it takes to put these pieces together to be a trader. Chart reading and trading are not the same skill. So I hope you take that and a little bit of extra time that you have. Watch that part again. Click over to the community tab after this video is over. If you want, you can copy and paste that whole thing, because it's those kind of distinctions that make you something special, because you're learning from everything that's unfolding instead of just saying, I made money, I lost money. I made money, I lost money, and you're not learning anything. Review the strategy, trade, coaching. Review the strategy, trade, coaching. You can join us in the bootcamp if you want. Click the link below the video. You can stay with us here on social media. That's absolutely fine as well. We're just talking about that one moment in time. We're not talking about the big picture. We're not talking about where it's going to be a month from now. We're talking about now, last night into this morning. And I think it's kind of fun to see stuff like that unfold, because it really adds to your confidence. Not that you can predict, but that you know what you're looking at, you know what should happen, and you know how to put those pieces together. Okay, so kind of cool stuff, and I wanted to share it. If you happen to not be in the boot camp with us right now, I wanted to share some of the stuff that goes on behind the scenes. So what we're going to do now is we're going to work our way over into Bitcoin. As we discussed, Bitcoin looks like it's holding the bid. We actually had a deeper level that we were looking for. So if we look at the levels, and I had a meeting this weekend with some bigger friends that are trading Bitcoin. 42,000 was the area that we were expecting to pull back. We're looking for this downtrend to have one more push and a pause, a push, a pause, and another push down. 42 is the level. You can see that we're actually trading up pretty big. What I want to point out here is we actually, if you remember yesterday, we were discussing a couple of different stocks, and AMC being one of them, where a stock pushes down, you expect follow through, especially if it had a big breakdown level and big volume on that push down. But when it pushes down, consolidates, meaning goes into an inside candlestick and then reverses. Remember, if this happens, then I plan to do this. So if it pushes down, I expect follow through. Then I will hold that short sale, or I will not be a buyer. But if it pushes down and goes inside or up, which Bitcoin actually did both of those things over the last 2 days, that's not what's supposed to happen. So you keep making these if-then scenarios to yourself. You now know what you're going to do before you do it. And again, raise your hand if you get stuck in a position, you're like, oh my God, now I got to panic because something happened. That's not good trading. Good trading, great trading, professional trading is whenever stuff unfolds, you know exactly what you're going to do before it starts to happen. All right, so we work our way back over to Bitcoin. This is where we had that push down, broke this short-term support. The next day, it did not follow through, and today we're actually moving in the opposite direction. And now we're actually touching and right at the downtrend that started in mid-November. So roughly a 4-week downtrend, and now it looks like signs of reversal. So if we take this a little bit further into the day today, what do we need to see to potentially start buying Bitcoin down here, or Bitcoin mining stocks as we discussed today? Which Bitcoin mining stocks would we buy and how would we buy them? If you've been a regular viewer of the channel, we've been spending a lot of time talking about this because quite a few stocks have pulled back before we started to look to buy those stocks. And by the way, if you're not, just please do me a favor. If you're getting value, smash that like button and hit that subscribe button. So now the conversation, the language that we use, and it's kind of cool. You want to write this down as well. If it's the start of a reversal, that means it should be starter shares. Do not get in front of a freight train with, hey, everybody, here's my full boat. Come and hit me. No, we're taking a downtrend, seeing signs of a reversal, a potential start of a reversal, potential start of new order flow, which means that a start of new order flow should translate into starter position size. If it rallies and pulls back, big deal. You had starter shares on. If it rallies, pushes up, pauses, that's where we'd look to add to a position. So in Bitcoin here, what we are looking for is for today to hold and tomorrow to have a candle that looks exactly like that and close above this downtrend. So that is essentially what we're looking for today and tomorrow. If that unfolds, then we have some proof. We have some proof that this bearish order flow has subsided, and 2 days worth of buying, higher highs, higher lows, and both days closing near the high, that would mean starter position for me. Does that mean I'm going in full boat? No. It means that I'm looking. It means that I'm putting shares in my position summary. This is a really advanced topic that a lot of people don't know because you, quite frankly, have probably not traded on a trading floor like I had in New York City. We got a couple of questions last week when I talked about Hood, when I talked about PM, Philip Morris, a couple of people jumping all over me saying I was predicting a bottom, I'm bottom fishing. That's not what I said at all. Professional traders very, very often will buy shares of a stock that are interesting, that might be reversing, but 100 shares, not 5,000 shares, 100 shares. You know why? For what we talk about here every day, we talk about tape reading. If it's in your position summary, you know that better than anybody. You know that stock better than anybody on Wall Street because it's going up, it's going down, and you're in that position. It is common on a trading floor to get initial share size, to have that in your position summary, because now you're watching, are you up 50 cents, down 25 cents, up 75 cents, and now it's positive. You're watching the tape based on your P&L, and that puts you in a better position than somebody who's just watching it in their position summary. So for anybody who thinks that we're calling a bottom here, that's not what we're doing. We are getting on an initial position to start tape reading. If the feedback comes back positive, meaning a push up and a pause, then we'll consider adding to that position. Hey, Solomon's here. If it moves against us, it's only an initial trade. Please do me a favor, type into the chat if you understand at least the context of what I just said because it's an advanced topic. And you know what's really cool about that? When I first started trading, you couldn't even do that. You could trade 100 shares, but you couldn't trade 50 shares or 75 shares or 20 of one share that people do today. There was a thing back then where odd lots actually cost extra to trade because most of it was actually being done manually. So it was a pain in the butt and they would charge you more for it. You could do it, but it cost you more. Today, fractional shares, you can get in and out of it all over the place. So there's two different ways to trade this. You put on the first piece if you get the first line, or you wait for the first push and pause now that you got a little bit of more feedback. So I can't stress strongly enough. These are the kind of advanced trading strategies and thought processes that I hope to give you. And I'll give you another one that's pretty cool too. Let's say that you're watching a trade, and we'll actually go to, we don't have to go to stock. You have a trade and set an alert, right? If it gets up to that level, that means something. So you have two different ways of doing that. You can get up to that level, set an alert. That alert will send you an email or a text message, or it'll light up in your software. What we did as professional traders is we would have a buy stop up there for 100 shares. And now I'd be in the position, and now it would be in my universe. So two different ways to do it depending on your experience and how good you are at making distinctions. Set an alert up at that price or set a buy stop up at that price for whatever the smallest amount of shares are that you're comfortable with. So it pops in your position summary, and now you're watching those and reading the tape in those stocks. So it looks like Bitcoin is bouncing short-term inside day, breakout into well bid day, looking for another well bid day, which means now that's going to translate into us looking at a couple of these mining stocks, specifically Mara. And if we pull back here on Mara, this is a big support level. So once, twice, three times, almost four times here, right around 30. So that's a big level. You can see it's already up 6.5%. We're going to be looking at Riot, BT, and HUT. So those are the main ones that we keep an eye on in our community. And I'll give Aldo all the credit in the world. Aldo's our resident crypto trading pro. Those are the ones that Aldo has us watching. There's a few other ones, but those are the main ones. So that's how we're actually going to be keeping an eye on the crypto mining and the crypto mining stocks today. I want to work our way over into the momentum trading stocks that we talked about yesterday. If you remember, we spent a lot of time yesterday talking about NVAX and the healthcare stocks. So the healthcare stocks have been very strong over the last couple of weeks. Pretty much every day we have been rotating. So remember, one of the biggest things that we do, we want to find the easy order flow, to spot. We're looking for where smart money is allocating buying pressure from 1 hour to the next, 1 day to the next, 1 week to the next, 1 month to the next. It's a million times easier. We just say, where are they already allocating money, and how do I piggyback on that? So the healthcare stocks have been the group that we've been talking about, and they've been pretty strong. So if you remember yesterday, NVAX had a monster move higher, and it was all the way up there. Now, if you remember the conversation we had yesterday, we used Apple as an example where Apple rocketed up a certain amount, and we said it's already gone further than what it normally does. Therefore, I still like it as a buying opportunity, but I'm not going to buy it when it's already gone 120% of what it normally does. Yesterday in NVAX, we said that it normally, the biggest move recently was $75. Heading into yesterday, prior to the gap yesterday morning, it already went $60. And then with yesterday's gap, it was right around that $75 average true move. So we said, reading the tape in NVAX, we absolutely want to pay attention to this momentum, but it needs to meet certain criteria. And that criteria for us yesterday was it needs to stay above the opening price for us to be looking to at least day trade the stock. Best case scenario, it holds the bid and closes strong for a potential swing trade because the stock happened to be super strong and there's a big catalyst on it. So here's how it actually ended up unfolding yesterday. There's the opening price yesterday. And you can see within the first 5 minutes, it traded higher a little bit, but then the rest of the day, it was below the level that we were looking for. These little things are what's going to separate you from frustrated Frankie to profitable Pamela. Those two. And by the way, today's my sister's birthday. Happy birthday, Pam. I don't know if you're watching the video. That little distinction, pre-market saying these stocks are in play, they're on fire. The last 2 weeks, they're amazing. Ton of headlines over the weekend. We're going to watch them. We made such a big distinction yesterday about momentum trading, and it was not a longer-term position. It was not a longer-term, we're investing in these ideas. It was right now, these stocks are in play. The last 3 weeks, the sector and the industry group was in play, but Once it opens today, we're going to go from hour by hour to determine whether or not the stock is a buying opportunity only for momentum. If you go back to yesterday's video on NVAX, we actually took it even a step further to say that the profit maximizer that we use, we have two different types of profit maximizers. One is momentum, and one is a little bit longer term trend trading, where we give the stock a little bit more room to breathe in exchange for a bigger move. Yesterday, we were also very clear saying we planned on using the momentum profit maximizer for all of those reasons. So if I can just go back to what we talked about here at the beginning, and the most important part, which is here. This is building an argument. Building an argument to become the best trader that you can be means that you are putting the pieces together that if the market's strong, if the sector's strong, if we're above Monday's opening price, if we're above today's opening price, then I have conviction that I'm looking for follow through. If the monthly chart is doing something, but the weekly chart is not, we have conflict. So it's not perfect. So you move away from perfect. Everything less than perfect means that you have to have different position size. If the monthly chart is awesome, if the weekly chart's not awesome, but the daily chart rallied yesterday, three different scenarios. I like the idea from a bigger picture, but I'm not going to trade full position size because it's less than perfect. These little kind of playbook things are the stuff that you look down on your sheet. Okay, monthly strong, weekly weak. Yesterday was strong, good volume. Okay, I could look at that stock today, but I'm not going to trade initial full share size of bigger position size until the weekly chart also goes positive. All of that makes trading formulaic. So if you go back to what we talked about at the very beginning of this email, I'll just show you that one more time, the formulaic part. Once you start to build those pieces and put those pieces together, that's where you are 100% in control of your trading outcome, because now you're not praying to the trading gods. Please come back. I promise I'll call my mother-in-law tomorrow. I promise I'll be nice, to my neighbor. Don't pray. Plan. There's such a big difference in the long-term outcome and your mental sanity that everything just starts to make sense because you know what you're looking for before it happens. But the only way to do that is to have structure in the first place. So hopefully when you're watching all these videos that we're doing, or especially if you're in the boot camp, you understand that everything we're talking about right now, which it's stacking the order flow. We're stacking the order flow and then timing our entries into that order flow. So yesterday we stacked the order flow, and we'll go into the charts again of NVAX on the daily chart. Clearly, the stock has had buying recently, and especially this 3-day period. And if we go into the XLV, looking at that bigger picture, clearly there was order flow here over on the daily chart. Clearly there was order flow here over the long term, and especially over this 2-week period. The better job you do of stacking the order flow, the more conviction you should have in that you are looking at the right stocks. Then the second part of that is it perfect order flow? Is there a conflict? If it's perfect, what does that mean for your position size? If there's a conflict, what does that mean for your position size? And then if it's not perfect, what does that need to look like before you get involved with more shares? I will tell you flat out, and I know I mentioned this last week, by a mile, nothing's even closer. By a mile, the two things that are the downfall of really smart people trying to learn how to trade, number one is trading too big before you actually learn how to make money, because that also means you're not managing the downside. And number two is not understanding, or maybe you understand it, but you're not accepting it, not accepting the fact that you're going to have some losing trades. It's not a question of the losing trades that are the problem. The losing trades are not the problem. I'll say that one more time. The problem is holding losing trades. That's problem number one. Problem number two is once you conquer that, the next step is the next problem to solve. The next problem, remember, go through that flywheel that we just talked about. The next problem, as you learn more, is understanding how to make more in your winning trades. And just the thought process behind that is if you manage the downside, the next thing is to get your company, your trading business to increase its revenues. That's where trading really becomes fun, because you've minimized the downside. You proved to yourself you can get out of losing trades, ones that aren't working out. And now the next part is understanding how and when to have bigger share size, how and when to add, and how and when to kick those profits to the curb and direct deposit them into your bank. All right. Covered a lot of stuff today here, everybody. I just want to make sure. Oh, there was one more that I wanted to talk about. I want to make sure that we get into that one. A stock that we pretty much watch every day in the boot camp, because SAVA Sciences, the symbol is SAVA, and you can see the short interest is rapidly going up, and it gives a little bit of a breakdown. I'll actually post this into the comments here so you can take a look at that. And we're going to work our way over to SAVA on the daily chart. Now, I want to give you full 1,000,000% disclosure on this stock, right? I want to talk about this. You can see the chart here. SAVA is the symbol. We watch it every day in our community. Lynn Ramirez is all over this. She knows every move in this stock and alerts everybody in the community. This stock is a little volatile. You can see that it was $120 next couple of days, traded all the way down to 50. The stock is you need to be on top of your game to trade this stock. The difference between the bid and the ask spread can get wide. Sometimes, let's just say right now it's 53.60. It could be 53.60 on the bid by 54.50. It could be a 90-cent spread between the bid and the ask. So you have to understand how to do that as well. If you just mark it into this thing, you could be down on the trade by $1 and it doesn't even move, just simply because you need to understand how to place your orders properly. Short interest, and we had this question brought up last night. What does it mean, the short interest, and why is everybody talking about it? Obviously, it came into the universe in the last year and a half because of the diamond hand guys and girls on Reddit squeezing GME, squeezing AMC, squeezing BYND. And if you're not familiar with what I'm talking about, I'll just show you that chart pretty quickly. This right here, that was actual price action. And we go to AMC doing the same exact thing. They were basically targeting stocks. Again, nothing wrong with what they did. Targeting stocks with a high short interest that if buyers step in and start to push the stock up, short sellers are looking for the stock to go down. They're betting on the stock to go down. So high short interest means a lot of people are betting on it to go down. But if a lot of people start buying the stock, those people that are short, the high short interest, have to get out. If they have to get out, that means they have to buy. If the buyers are stepping in and seeing the short covers are buying, they're panicking and buying. So now you have two different groups of people buying the stock, and that's where you get these violent moves to the upside. News report today about the short interest in SAVA increasing. I want to make this clear. I'm not telling anybody to buy the stock today. I'm not. I'm just pointing it out as a lesson. So full disclosure, if you have the experience, this is pretty darn interesting. You need the experience to trade a stock that has a wide spread, a stock that can move fast. If you have that experience, if you look in the mirror and say, yeah, that's me, then maybe take a look and see what the price action does using all the lessons that we just talked about before, because that's a pretty interesting story. I wanted to end on that today. All right. Have a great day, everybody. I can't tell you how much I really appreciate you being here with me. If we're providing some value, definitely go back and watch those videos. Talked about a lot of stuff today. Do me a favor, smash that like button, hit that subscribe. I'd really appreciate it. If you have any follow-up questions, because we talked about a lot of stuff today, leave a comment all the way below the video in the comment section, and I promise you I'll get back to you as soon as I can, or maybe I'll follow up and answer it in a follow-up video, okay? Really appreciate it, everybody. If you want to learn about joining me in the boot camp, it's a 30-day experience. That's in the description as well. Have an awesome day, everybody. I really appreciate your time. Thank you so much for choosing to be with me in the morning.